The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey folks, this is Billy Ray Valentine from 100 South Broad Street, Philadelphia, Pennsylvania. Looking good, feeling good. Well, let's take a look here. We are closed in Germany today for the DAX all across Europe. I guess they celebrate Halloween. Does anybody want to know? We're going to have a little test here this morning, a little pop quiz. What is this date most famous for in the United States, not counting Halloween? I will give you a hint. FBI. Judge's ruling. It's the day of the most bank robberies by far in the United States, Halloween. Makes good sense, right? People are wearing costumes. You walk in the bank, dressed as John Dillinger, and you walk out with the cash. But this is the day. 10 years ago, the bank across the street that I use, Wells Fargo, was hit on on Halloween. So anyway, I thought that I would throw that little bit of trivia in. Okay, we're going to start out today, since there's no DAX, we're going to start out with the gold market. And as you can see here, we've made that ABCD three-drive pattern down there on the 27th. We rallied up for 3 days. You'll notice that the rally amounted to just about $17 exactly, and that's the harmonic number. And now we're coming down, and we should test the 61% retracement down here at around the 1270 level. And if it's good, it should hold between 1270 and 1266 within that $4 range. If it fails there, then we're most probably going to go down to that larger target that we're looking at, which is around the 1250 level. This is we're still in a downtrend here. What's interesting about this, if you study these markets, and that's what I do, these markets act so they repeat so much over and over again. This is the work that Andrew Lowe proved in his book, The Non-Random Walk Down Wall Street. And all we do is look at some of these, Fibonacci ratios and a few other ratios from Sacred Science to try to determine, where the lows and highs are, using little different things like time counts and cycles and maybe a few dojis and stuff like that. But that's what trading is all about. But I wanted to talk just a little bit this morning about trader fatigue. This is when you start making errors, usually buy-sell errors or fat candle errors, where you put in one contract and you do 10, something like that. But when that happens, folks, you got to take a break, because that means you're overloaded. It'll usually happen after a long run of success, and you start making some errors. When you start to see that, that is a really, really big time to take a break. When that happens to me, I usually take a 2 or 3 day break, or I don't actually I look at the markets, but I don't do any trading. And then when I do come back, I start out at a very, very small level. I'll do just maybe one contract, and then work into the usual units that I'm looking for. I'll still look at the markets, but I won't do any physical trading, because once you do the physical trading, your money gets involved and the whole thing changes. But this, when we do trading, this is like any other business. If you look at baseball, you see that people that make mistakes in baseball, like walking a runner, in that game 5 of the World Series, when Houston won 13-12 in 10 innings, you realize that every batter that walked scored. I mean, that's just a terrible statistic. But you're giving somebody a free ride to first base and they end up scoring. That was the whole ball game. So the same thing happens in trading. You put your stop a little too close. You put your stop a little too far away. You're not thinking properly. You maybe have too many positions on, or maybe your position size is too big. But that's where you get into problems. So when that happens, you take a little break and come back and look at it, a little bit differently. I know it's hard to do sometimes, because if this is your job, what are you going to do? But remember, not having a position is having a position. It's very important, to remember that, because it's really, really very important. Now, something big is happening in the markets, and it's going to be hard to explain to you what it is, boys and girls, but we want to take a look at it first. Before we get to that, let's just do it now, get it out of the way. All right, we're going to have a little bedtime story of Goldilocks and the three bears. And Goldilocks went in to see the little baby bears, and she sees that they're all having their porridge, except baby bear number 3 doesn't have any porridge left. And Goldilocks says, well, where's my porridge? She says, I don't know, it's gone. The other 2 bears got their porridge, but I didn't get mine. So let's just look here at the 3 bears here. This is crude oil way back in 2008. You see that big move up there at ABCD? Guess what was happening at D? In a big way. It was open interest was dropping the whole last 2 weeks in crude oil as it went, from 120 to, went from 120 to 147 in a matter of about 2 weeks. Well, actually 3 weeks, and then it stopped. So we have the same thing occurring right now, boys and girls. Let's just look at this right now. Here is I'm going to have to blow this up quite a bit. Hold on just a second. I hope you enjoyed the bedtime story. All right, I guess I've had too much medication this morning. All right, let's look here at the Dow, at E-mini Nasdaq futures. You'll notice that the open interest in this, if you go to the far right, the total open interest is 272,147. And if you'll notice, yesterday it dropped by 5%. 14,128. That wipes out all of the minor buying that's happened over the last several weeks, because many of these days we've had drops in open interest, but nothing like this. 5% is just absolutely huge. And folks, it's just a matter of time. So set your watch. And I don't know when it's going to happen, but it's not if, it's when. So sort of pay attention to that. Now, if we go and we look at I want to give a little bit of a little feedback here to see what we get. This is the next one we're going to look at here is that chart didn't post right. You're kidding me. Let's do this one here and see if this one posts right, and then I'll repost it. This is the E-mini S&P future, and you'll notice that the open interest on this one is 3.19. Now let's take a look. 3.19 is slightly bigger than 247, correct? Like maybe 10 times bigger. And look at the open interest in the E-mini. It dropped 10,000, which isn't much, but compared to what the Nasdaq did, that's quite a bit. Now I will do. Let's do it again here. Hold on. I'll post this again. Doesn't take any. The cost is the same, I guess. Let's just move this up here, and we'll see it again here. This is the only reason this is important, folks. Is Tom O'Brien pointed this out about 2 weeks ago when he said, the people are in the stores, but the stores are empty. The only way these markets can go up is if we have new buyers coming in. It's not like the stocks where there's a certain number of stocks outstanding. We don't have that. We have to have an actual buyer or seller to get it. So we'll see what oil. I didn't say anything about oil, did I, Gator? Huh? I guess I didn't. Who knows? Wow.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to be taking a look here at the crude oil here on a weekly basis. As you can see here, we are approaching the 61% retracement again, and it's also, let's try that again, Larry. It's at the 78% level. We've hit it twice. We hit it once way back in January of 17, and then also here. Regarding that crude oil back in 2008, I was fortunate enough to sell some. I sold a pretty good quantity up there. As a matter of fact, I waited till it broke down below 144 before I got in it, and believe me, it gave me about $1 a barrel before I even got the fill back, and it was electronic, so it was really dropping fast. The problem with it was I was trading through PFG, and when I had one heck of a year, and of course they went tapioca. And not only did I lose my profits, is that the old federales still wanted their money. Okay, let's take a look here at the heating oil, because heating oil is doing pretty much the same thing, only it's a little bit more bullish. It's been leading the market up. Yes, old Russell. Russell is in Terre Haute, Indiana now. He lives not too far, about 10 miles from my sister. Of course, he's at the federal penitentiary there. But anyway, this is the heating oil, and you'll notice here that we've exceeded the level from January. We haven't done that yet in crude oil. And crude oil, remember, is the leader of the pack. So this is really strong resistance that we have up here at around this $55 a barrel in crude oil as I see it. We've already cleared it, as you can see in the heating oil. And if you look at the heating oil chart really closely, you can see a really nice little butterfly pattern forming as we make a new high. So that's pretty much what we're looking at right here. Anyway, let's move on to the next one here about the oil market. With the oil market, folks, the open interest in the oil is really difficult to try to understand, because a lot of the oil trading is done in the cash market. I don't know if you folks know this or not, but there are 6 people that trade oil that probably trade about 75% of all the oil in the world. There's one guy in London. There's a guy in New York. There are 2 guys in Singapore, and another guy, they don't even know where he is, but they really control the market. I mean, they'll move the market. So I don't know who these dudes are. I've just heard about them, especially the two guys in Singapore. But anyway, these five guys really do a great deal of the trading. They don't do any scalping, folks. These guys, they put on monster positions. If it's trading at 34 and they think it's going to go up, they're market makers. That's exactly right, Marshall. And not only that, but they must do something because they trade pretty close to where these numbers are that we look at. So we'll see if that's happening. So watch the crude oil. I like trading crude. I probably trade it 4 days a week. Last night it made a 78% retracement of yesterday's high up there around that 420 level. Hasn't done much since that time, but it's it's trading at 50. Yeah, hit 54.30. It was 54.07. So not too much is happening. With that right now. There is one market that looks very interesting, folks, and that's one that we've been looking at for quite a while. And that is the Japanese yen. I got to do two things. Let's try to do the Japanese yen here first, I guess. Yeah. Shucks. Let's do the euro first because that's another one big one. I want to cover some of these because they're moving around pretty good. As you can see here in the euro, we had that big break from that 118.40 level. We came down. We hit a little bottom, and you notice over the last 3 days we're making an ABCD pattern. Excuse me, it's coming in at the 382, comes in at 116.70. So I would be watching the euro at 116.70. That looks extremely interesting from a point of view. But there's another one that looks also very interesting, and that is this Japanese yen. Let's just bring this up here because it's happening right now. I was watching this last night. You'll notice this is the 30-minute chart going back over the last couple of weeks. You can see why we stopped here yesterday. We were right at a 1.27 and a 61% retracement and a 50%. Now we're rallying. If you notice the 382 up there at 113.50, we are almost there, boys and girls. We're trading very, very close to that right now. So watch the Japanese yen because if it's really bearish, it's not going to get much above that. And then we're going to see if that is going to be, some type of a high. So we'll be watching that, very, very closely. So that's one thing. We're chatting here a little bit in the room here about the grain markets. I still believe that the wheat market is a buy if we get down here to this 420 level. Let me put this up here and take a look at it. We should make new lows. We haven't taken out the lows of the 22nd yet. But we came close. So if we get down to that you know what? We did. We just didn't get to 420 yet. We got to 422, so we took out a new low, but we really didn't do much, from that level. So those are just some of the ones that we're sorting to keep an eye on, as we're looking at these this morning. If we'll take just a moment here, folks, and take a look here. I want to put up the chart of Apple. Hold on. Excuse me. I want to bring this up because this is important from a couple different standpoints. One is that opening price that we talk about. This is yesterday's action in the Apple. We completed the ABCD since September the 25th. And you'll notice that these little red spots that you see, those are little boxed in, those are the opening prices. You notice that Apple opened a little bit higher and immediately shot up $5. So it's a big advantage, when you look at that opening price. And you have to look at the opening price as it relates to the 9:30 time frame. Don't look at that overnight market stuff because I think that's funny money playing, but that's my 2 cents worth. But now we're at the 1.27 expansion up here, and that comes in right about the 168 level. So keep an eye on Apple at around 168, and also keep an eye on Amazon at $2,500 a share, because we heard from a rumor that Bezos wanted to surpass Bitcoin in price. So there's a possibility that we could be looking at 6,000 in Amazon here over the next few weeks. No, folks, I am on medication, but it's not that kind of medication. Anyway, those markets are a little bit crazy, but it's not that same way. In the Dow Jones is only making a 38% retracement here, folks, as we approach new highs here in the Nasdaq, and also the S&P is just barely making a 61% retracement. So the overall market is being not manipulated; it's being influenced by the Nasdaq, which, if you turn on Bloomberg or you turn on CNBC, what are they talking about? Apple, Amazon. They don't even talk about Google too much anymore, but it's Apple and Amazon, and then a few of the other things, that are making the markets move the way they do. Remember, we're going to have Norm Winsky as our guest here on the full moon coming up here. So live every day in an attitude of gratitude, and I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to talk a little bit about the XAU. And the reason why I'm bringing this up is I got an email this morning from one of our really good friends over in the UK, and he's been following this index that they have over there, and it's much more bullish than ours. Evidently, the London market's viewing gold as far as the gold miners. It's actually acting much more bullish, and also he reminded us that silver is acting pretty good too. So keep an eye on those, because we've got a chance here in gold. If we can hold this pullback that we're looking at here in gold, I think we've got a pretty good chance to have a pretty good rally. So watch this 1270 level. Of course, below 1264, it's probably no good, but we want to take a pretty good idea of what's going to happen. Now, there's a lot of talk, of course, because we have the Fed meeting for the next 2 days. It looks like we're going to have a new Fed chairman. I don't know about that. I would keep I wouldn't make any bets on that one, but we'll see. If I were the president and the stock market is where it was, I wouldn't rock the boat, if you want to know. But of course, he likes rocking the boat. Anyway, let's take a look here at the bond market. We've been able to identify the fact that we had this 61% retracement come in exactly on the bonds down there on the 27th. The number was 150.13. I think, yeah, it was 150.15. Let's try it again. 150.13, and I believe the low was 150.13. And we've had a pretty good rally. We rallied 2 handles up. Now, what I would be expecting here, because of what happened between the 6th of October and the 13th, we had a really nice rally that went from 151 to 154. It went 3 handles. So far, we've gone 2. So I'd be expecting a pullback here, maybe down to about a handle lower, 151.19, somewhere in that ballpark, and then one more move up to the 153.20 level. And if you'll notice that little dotted line that's there, that's like a little trend line going way back to October. That comes in at the 78% retracement of that last swing, which would be equal to the swing that we had during the 6th to the 15th of October. That's just the market repeating over and over again. So we want to be watching this. Remember, long-term interest rates are going higher, folks. They topped over a year and a half ago when we hit the 170 level in the bonds. We're trading at 152. Now let me see if that's right. 152 is much lower than 157 or 174. Yes, it is. So we are in a downtrend. So we'll see how this works. The other thing is the Chinese bond market has been under attack these last few days. I've seen a few charts on it, but they're too foggy to even bring up here. But that market has got hit really hard, and so interest rates have gone up in China too. But believe me, the Chinese market is really it's pretty tough. What's really scary, folks, if you take the 10 largest banks in the world, do you know that 6 of them are in China? Hello. You see a picture here? This is a big deal. So anyway, we'll see what happens with some of this, but we'll keep a very close eye on it. I did mention that we're going to have Norm Winsky on this week. I'm hoping to get in touch with Bill Meridian to have him on, hopefully either tomorrow or Thursday, to see if we can get this show on the road to see what he's talking about. And then we'll be watching it quite a bit. I did want to update this chart that we got from Stan Harley last Friday, talking about the market. Again, we had a new high in the Nasdaq, and yet all this advanced decline thing is still turning down, which is telling you that there are selling coming into the market. It's just not coming into Apple and Amazon and Google and some of these other big ones. Now, Under Armour today, I understand from listening to Tommy Jr. that Amazon's down about 20% because of poor sales. That has been a stock that's really gotten whacked since its opening indication, but we'll see what happens with it overall. But it's trading down around $12 a share. It closed yesterday at around 14. So when the news hits some of these things, it really makes a huge difference. So we'll see. I just can't give you too much stress here as to pay attention to what's happening with this open interest, folks, because this is really important. I mean, and the reason why it's important is because it tells you where the buyers and sellers, and there's no more buyers coming in. The reason why open interest drops and prices rise is there's no new buyers coming into the markets. It's only short sellers are covering their position. So once the short sellers have covered their position, there's a vacuum under the market. Now, maybe it'll be even down one day. There's a possibility of that. Now, I don't know. It's been up how many days in a row. This is the largest string, folks, in the history of the stock market, going back to the old buttonwood tree back at the corner of Broad and Wall, that we've had a market that has not corrected 3%. This is the longest streak it's ever been in. The market has not corrected 3%. 3% on the Dow is around, 700 points right now. So, if we do get a 700-point correction in the Dow, it'll probably surprise a lot of people, but it'll mean nothing on a relative basis. Okay. All righty, we got to move on to the next one here to see where we are here, and we've covered one question here. I've got to check prices here because we're into the opening now, and okay, all righty, we're doing all right here. That's all right. Okay, we'll move on here. We haven't made a new high yet in the Nasdaq. We just sold off about 10 points really quickly. I don't know if that means very much or not. We are getting really close in the wheat, folks. We're down here at 422.5. I have to say that pay close attention to it down here at this 420 area. That's a 1.27 level. You notice the hourly chart that we focused. This is Mother God and country. I don't know if it's going to work or not, but this is what you dream about. This is when you're talking about Goldilocks and the Three Bears. Well, they all got porridge. It's all going to be down here at around the 420 level. You can become a farmer there without risking very much money at all. And we'll see if it's going to help, but that's just a pattern. That's all it is. But pay close attention to it because it's pretty interesting. I wanted to check the euro here because we are trading up here at the 116.39 level. If we get up there to that 116.70, that's up about 30 pips from where we are right now. That would be a real interesting spot to look at. And this Japanese yen is within a heartbeat of the 382. We're only about 6 pips away in the Japanese yen, so pay attention to that. That also can be very influential in the gold market. We posted that yesterday to show you that the relationship between the between the yen and the gold was extremely high as far as a correlation basis. So keep an eye on that. That's going to be really close. We're really close in the gold. We're down. We need about $2 more down in the gold, about another 2 cents in wheat, and we'll be setting in River City, as old Robert Merritt would say. Okay, let's move on to the next one that we're watching here. I wanted to bring this up because I wanted to give you an idea. This is what we were looking at on Friday early. I wanted to bring this up because this is do I have any scary charts today, Peak? Every chart that I look at is scary because it has the potential of losing. Yeah, they're all scary. The problem is you don't know which ones are going to lose and which ones aren't. We'll cover this gold chart when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I think I posted the chart here of the feeder cattle contract. I wanted to bring this to your attention here because I know that a lot of people don't trade this, including myself. But here's a situation where you've got a market that is making a double top and open interest is dropping. The only reason I'm bringing this to your attention is let's follow it here the next few days to see if the open interest in the cattle is telling us what we're seeing in the Nasdaq market. So we'll see. You can see as quickly as the Nasdaq dropped 10%, new buying came in, and the shorts, of course, are absolutely scared to death. And it had a rally back to the overnight high again. We're very close with the old high. Anyway, but let's take a look here at the currencies here. Now, with the currencies, it's really hard to look at the open interest. You can look at the open interest at the Merc, but that's only like less than 1% of what's really happening in foreign exchange. Most of the foreign exchange is done in the cash market, so pay attention to that. But look at this Japanese yen here. We had a really nice correction here, equal to the one we had back on October the 16th. And now, of course, we're almost at the 382 level. We're just in a few pips away. That's going to be up 55 pips from the bottom. That's very close to the harmonic number that we're looking at here in the yen. So watch this very closely. Anything above 113.65 would tell us that this is not working, but we should stop at the 113.50 level in this Japanese yen if it's going to be stopping at that particular point. So that's one that I'm really paying attention to right now. We're very close in the wheat. We hit very close. We got down to 20 3/4. So like Grandma said, well, the porridge isn't ready, but the stove is hot. So let's watch this wheat down here, because at 419 we have a big ABCD, multiple ABCD patterns. We have a 1.27 expansion, and we have a 3 drive to a bottom pattern. There's a lot of things happening in this wheat. Whether it's going to work or not, certainly remains to be seen, but we'll pay close attention to it. One of the questions that someone's asked is about what would be the upside breakout in gold. If we get above 1,300 again, folks, that's $30 from where we're trading right now. That would tell us that we're looking at something that could be extremely bullish. But I think if we get above 1285 right now, that would be the first indication that it would be good, because we were testing this 1270 level. Hopefully we're trading at 1272 and change right now, so a couple bucks lower would certainly make it look really interesting, from that standpoint. But we'll watch this very, very closely. We got this wheat very, very close. We've got the grains. Actually, beans are still holding their own. Corn's down a couple of cents. Remember, there's a great deal of support at the 460 level in the corn market, so pay close attention to that one. It's a very interesting one, to be watching also, because it's one that does jump around quite a bit and give you pretty good chances to buy it. The soybean oil still acting okay. It's backed off about 15 points from its 78% level, but it's still acting pretty good. But we'll see what goes on as we go through looking at these different markets. But this wheat looks the best of anything that I've seen today, and we're only half a cent away. Just okay. If you're going to use the wheat, folks, in the market gets down there, make sure you use a CIC order on the wheat. Okay, that's a very important order to use when you're trading. So use a CIC order, and that will protect you against any loss. For those of you who don't know what a CIC order means, cancel if close. That's sort of a commodity joke that they used to talk down there at the old Chicago Mercantile Exchange many, many years ago. All righty. Let's see what we have going on. Any other questions? We don't have any other questions here. All right, let's get back and discuss a couple of these markets. I think keep an eye on the silver here, folks, because we've let's just bring this up a little bit, because I'm really getting friendly to the gold market and the silver market. We are holding up here. The old low we had down here was at 1660 in the silver, and we're only about 20 cents above that. So it still hasn't, gone crazy. Been as high as 1691 today. So we'll keep an eye on that to see what's going to happen with it. But it looks pretty interesting to see what's going on. Someone's asked a question about the open interest. If I would explain it again. Open interest means that for every buyer, there has to be a seller, because it's a contract. It's an actual legal contract. And so when you have someone that wants to buy, they're obligated to take delivery, and someone that sells is obligated to give delivery. Now, if prices are going up and open interest is dropping, it means the people that are buying the contracts are people that are short, because they're exiting the market. And when they exit the market, there's no new buying on the other side. So open interest drops. Yesterday, we had a 5% drop in the Nasdaq open interest as it made new highs up around this 6150 level. Now, that means there's no new buying coming in. Now, ask yourself the question, if the store is open and they don't have any product to sell, what's going to happen if there's no new buyers coming in, folks? It's going to be a vacuum under there. The $64 question is, I don't know where that's going to happen. So we'll see when. All I know is it's not if, it's when. Tomorrow, the next day, I'm not sure. Remember, the bias for the market being up on the last day of the month in an up week and an up month is very high. So it's going to be difficult for the market to close lower today. But, it was the same yesterday. It has, very strong bias the last 2 days of the month. Yet the overall market was down yesterday. The Nasdaq was the only thing that was up. The S&P was down. The Dow Jones was down. The Russell was down. It was only the Nasdaq, and that's where the players are. Back in 2000, when we had the .com bubble, the Nasdaq didn't turn down until March 24th. Yet we turned down in January in the Dow Jones and the S&P. So they're different markets. So you've got to look at them each differently. If you're going to sell anything, sell the weakest, and the weakest is the Russell 2000. So, that's for today. Maybe it'll be bullish, a little bit later. But anyway, that's what it looks like right now as we're watching these things. We're certainly going to see the baseball game tonight. I think it'll be a really exciting game, and I'm certainly looking forward to watching it. And I'm sure it will be a lot of fun. We're only 3 ticks away now in the end, folks. We've actually, hold on. I think we hit it. Just a second. No, we're still... We're still about 6 ticks away in the yen of hitting the number, and we're half a cent away from the wheat, and boy, we're really close to that, so that's going to be an interesting to watch here. So watch this first hour of trading today in the Nasdaq. Remember the work that we got from our good friend John Jameson. Watch that first hour of trading. Actually, it's the first hour and a half, but between the 9:30, that would be 10:30 and 11. Watch that very, very closely, because if the market starts down after that, that would tell you that this opening price is kicking in, and you'd be looking at something that would tell you that you're looking at something that might be a little bit suspect. So we'll watch. We'll see what's happening with this as we go through. We're going to take a little break here, I think, as I hear the music coming in, and then we'll get back. Remember, we have Norm Winsky coming in, I believe, on Thursday as our guest to talk about the lunar stuff. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone's asked a question about breakout trading, and it works for some people. I don't do it too much. The key about breakout trading is you've got to be very careful about what your risk reward parameter is. There's nothing wrong with buying a breakout, and it's got some couple things going for you. A, you've got the trend in your favor. right? B, you got, volatility in your favor. The only thing that you have to be concerned about is how much you have to risk to see what the breakout is going to be. The good way to do that is to look at the lowest low before the breakout. And if you go below that low, that means that you've got a failure, and you certainly want to exit the market, at that time. So watch that, closely, because breakout trading is good for some. I don't do it. I basically try to put the patterns together and look at those as they happen. But frankly, it does work for some people. One of the trades that does work well with a breakout is if we go above a 78% level, because if you buy as it goes above the 78% level, you got a really high probability it's going to go to either a double top or 1.27 or 1.618. Again, the secret is how much do you have to risk, because that's what trading is all about. Winners think how much money I can lose, and losers think how much money I can win, because that's how Las Vegas operates. So keep an eye on that. That's the main thing. We've had a pretty big break here, about 18 points here in the Nasdaq. After we made a low, we went up and made a high, and then we've given that back. So keep an eye on this Nasdaq today in this first hour of trading, because if it doesn't make new highs, it's got a better than even money probability that, well, it's about 60%, that it's going to close lower today. It hasn't closed lower, I don't believe, in 20 days, which is another, all-time record. There could even be a possibility that Amazon would close lower, but that would probably be a bad tick, and no one would be able to understand that. So we'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.